Hello and assalamu alaikum everyone. A very warm welcome to the AAA mock debrief for September 2025 exams, and this is the mock which is published by ACCA. Now today is the session 2 of this mock debrief. Earlier in the session 1, I have captured the question number 1 of the September mock. Let's look into the session 2, look into the question number 2 for 25 marks, which is the section B of the paper. The question number 2, section B. Question 2 was around the syllabus area E, review and reporting stage. And one of the question in section B has to be from syllabus area E, and this is fundamental. So syllabus area E must be a strong area for all students, because one of the question on the day of exam will be from syllabus area E, just like this mock exam. Two companies were in focus. One was Curly and one was Larry. There were three requirements to this question for 25 marks. 5 were the professional marks. So technically, we had 20 technical marks to this question. Critical appraisal of the audit report for 10 marks. Management imposed scope limitation, matters and actions for 5 marks. And using the work of internal auditors and the matters you should consider when using the work of internal audit function for 5 marks. So the last two requirements were like knowledge-based requirement, but they have relevance to the case, because for using the work of internal auditor, we had an exhibit. So the answer was within that exhibit. And management imposed scope limitation, there was a management imposed scope limitation in the critical appraisal of the report. So the knowledge would then blend with that particular paragraph for writing in the answer. So let's just open up the practice platform. I hope you can all see that in front of your screen now. The practice platform with the question number 2 of this mock exam. Now, just like yesterday, we focused on the time management, which is important. And I appreciated lots of students who sent me the mock exam for checking, and they did mention time ends here, and they left the answer incomplete and they move on. So if you start adopting this strategy of stop and move on, that's a wise strategy to maximize opportunities in your exam. Now, question number 2 and question number 3, each of this question has 48 minutes of the total time, or 49 minutes of the total time, of which 12 minutes has to be spent on reading and planning. So in reading and planning, just like yesterday, this is the screen on the right-hand side. So you first have to read the right-hand side of the screen quickly within a minute or less than that, just to understand the name of the audit firm, the name of the client, any particular information about existing client, new client, listed company, etc. So this information could be critical, right? So you have to read this information. It says it's the 1st of July. You are an audit manager in Moe and Company. And you are responsible for the two clients, Curly and Larry. Curly operates in a pharmaceutical industry. So nowhere it's mentioned listed. So when the question is silent, we assume the clients to be unlisted. Curly and Larry are the two clients, and we are the manager in the audit firm of Moe. Now we have two exhibits, and that's quite a typical way Section B questions are set in two exhibits, and normally each exhibit connects with one requirement. Let's open up the requirements and simultaneously open up the word processor, because you have to do both these things together in the exam, because you will be copy pasting the requirements onto the word processor so that you can start answering the question number 2. Answer to the question number 2. Okay. Using exhibit 1, so you only have to use the exhibit number 1, which is Curly Company. Critically appraise the draft audit report. So you're pretty sure of this requirement. How many times have you done this requirement in the past paper? And you always know this note number. You are not required to redraft the extracts of the report. You just need to criticize anything wrong in the audit report. You have to do a critical appraisal. So critical appraisal of the report, and we have 10 marks for this. So we copy paste it here, and just in the bracket keep 10 marks. So we know we have to make 10 points to make up a 10 marks answer. And that's a pretty simple requirement. Okay. B, identify and explain any other matters to be considered, comma, and the actions to be taken by the auditor in respect of a management imposed scope limitation. So 5 marks we have for matters and actions in respect of a management imposed scope limitation, and that's coming from the exhibit 1. So that means the management has imposed a scope limitation on us if we read the exhibit number 1. So we have 5 marks for this. So we have to write a 5 points answer to get those 5 marks. Then using the exhibit 2, which is the Larry Company, discuss the methods that should have been considered in determining the assistance that could have been provided by and the extent of reliance which could be put on the work of the internal audit function. What sort of matters we should consider in determining the assistance that could have been provided to us by the internal audit function and the extent of reliance we can put on the work of the internal audit function. So that's from the exhibit 2 for 5 marks. And most of the time, you know the 3 typical things: independence, competence, experience, and the work documented. So 4 things are there, right? Fifth, we can find that from the scenario. So just write that here. And this is for 5 marks. So we need to have 5 points answer. And this is with reference to exhibit 2. So the answer to C will come from exhibit 2. Now, when you start writing the answer, you will erase the requirements. The requirements will become headings. We're currently copy pasting the requirements, so exactly know what to do. And we should not be coming back to this window of requirements. So we close this window of requirements and we come here. Now we have 3 requirements, 2 from exhibit 1 and 1 from exhibit 2. So let's first open the exhibit 1 Curly Company and let's see what's happening exactly in Curly Company. Critical appraisal and the actions and the matters related to management imposed scope limitation. Okay, let's open up the scenario. Curly Company operates in a pharmaceutical industry. The audit work for the year ended 31st of March is nearly complete. So your work is nearly complete and you are reviewing the draft audit report, which is prepared by the audit senior. So your work is almost complete and you are reviewing the report, which has been prepared by the senior. So we are at the finalization stage of the audit. You are aware that Curly Company is developing a new drug, and for pharmaceutical companies, research and development is a major expenditure. So Curly is developing a new drug and has incurred significant research and development cost this year, most of which has been recognized as an intangible asset. So most of the amount you have spent on research and development has been capitalized as part of your intangible assets. The assets recognized at a value of 4.4 million. So the total amount of assets recognized from this development cost is 4.4 million. The total assets of the company are 55 million. So you can find how material that is by taking out a percentage. And Curly Company has a draft profit before income taxes. Again, look at the terminology, IFRS 18 terminology coming in, not profit before taxes, profit before income taxes is 3.1 million. So you have a profit before income tax of 3.1 million. 55 million of total assets. So you will divide the 4.4 million with 55 million and you will find a percentage and you will get to know how material the development cost you have capitalized as part of intangible assets this year is to the total assets. And then you have the profit before income tax, sorry, which is 3.1 million. Now, just for a minute, you imagine that this development cost should not be capitalized. Look at the amount, 4.4 million. Look at the profit before income tax, 3.1 million. Your profit before income tax will become loss before income tax. Now, this is not a material matter. This is a material and a pervasive matter. How many times in my lecture I've given this example that one of the best example of what is material and pervasive is when the profit turned to losses because of an adjustment. So $4.4 million is a single adjustment. And if we assume this is all to be expensed out, then your profit will become loss. Having reviewed the audit working papers, you are aware that the management has not allowed the audit team access to the scientific results, to the results of the scientific test and trials performed on the new drug being developed. See how important that is? Management has put a limitation on you. They have not given you permission to access the results of the scientific test and the trials. And you know how important those trials are to confirm that whether it is to be capitalized or not. You need to know the results of the trials. You need to know the results of those scientific tests because that will confirm whether you are capitalizing it or not. Are they commercially viable or not? But you have no access to that. So how would you verify the conditions of ICE? How would you verify the conditions of ICE 38? How would you verify the criteria whether it should be capitalized or not? Because the management is not giving you permission to the trials, and they're not giving you permission to the scientific test. So they have put a limitation on you. So what is the issue? The issue is we are unable to obtain sufficient appropriate audit evidence. Now tell me, is this unable to obtain sufficient appropriate audit evidence material or material and pervasive? I just told you. Look at the amount of the profit before income tax and look at the amount of the asset recognized, 4.4 million. Is it material? Is it material and pervasive? The management imposed scope limitation. The management imposed scope limitation. Is it material and pervasive or is it material only? It's material and pervasive, right? Because look at the amount of profit before income tax that can go to loss. So is this unable to obtain, auditor is unable to obtain sufficient appropriate audit evidence? Is it material and pervasive? And if it is material and pervasive, then what opinion should we give? What opinion should we give if we are unable to obtain sufficient appropriate audit evidence, which is material and pervasive? Disclaimer. We should not be giving an opinion. We should be disclaiming from our opinion. So disclaimer of opinion is the sound answer. Let's see what the senior has done. Is everyone clear? We are unable to obtain evidence. We are unable to obtain sufficient appropriate audit evidence regarding to the capitalization of the development cost. How significant that is? 4.4 million, and that is more than the profit. So if we assume that this 4.4 million is to be expensed out, your profit will turn to loss. So all of you clear on the justification that it is a disclaimer of opinion? Please confirm that. Are you all clear? This is a disclaimer of opinion. Okay, thank you so much, Vijay, for that confirmation. Okay, just let's move on. Okay, now you go down. So it's important to read before you get to the critical appraisal. Now, when you do the critical appraisal, things will be far better for you. Now, this is the appraisal. It starts from here. The extract of the audit report is shown below. Let's see what's here, the problem. First of all, they have put auditor's report to the shareholders of Curly Company. I saw some of the mock answers sent to me, and they criticized the title of the report. They said the title of the report should have been the independent auditor report to the shareholder of Curly Company. That's right, because normally in the global practices, the title of the audit report we see is an independent auditor report to the shareholder of Curly Company. So if any one of you has criticized that, it's good. So the title of the report, yes, it's inappropriate. It should have been independent auditor report to the shareholder of Curly Company. So that's perfectly fine, right? So that could be itself be one critical appraisal for 1 mark. Then you go down with emphasis. Is emphasis of a meta paragraph should come before the basis of opinion and opinion paragraph? That's absolutely wrong. Emphasis should not come as the first paragraph. Rather, first should be the opinion paragraph. Then we should have a basis of opinion paragraph. After that, you can have emphasis. But they put emphasis first, basis of opinion, and opinion after. And that's technically wrong. And more importantly, basis of opinion and opinion have been put as one paragraph. And you don't find any segregation, see? There should be a segregation. Opinion, a different paragraph. Basis for opinion, a different paragraph. And opinion should come first. Basis should come after. So they have merged them together. Issue number 1. They have put basis first and opinion after, which is the second issue. Opinion should come first, basis should come after. Emphasis has come first, which is wrong. Emphasis should have come after the basis of opinion paragraph. So a lot of technical mistakes in the structure, even before we read what's written inside the report, right? So you start with that upfront. So if you're writing the answer, you will start quickly writing your answer in terms of here. Let's see how many marks can I draft for you in the limitation of the session. So you start writing first, you put the heading. If anyone wants to go with auditor report as a heading, so you can, yes, you can make this as a heading, auditor report to the shareholder, and you can criticize under that. The title of the audit report should mention the word independent, independent before the word auditor. So the title should be independent auditor report to the shareholder. So you get your 1 mark here, right? Then you go to the next heading, emphasis of a meta paragraph, emphasis of a meta paragraph. So first of all, you tell under the emphasis of a meta paragraph that the emphasis, you can use the short forms even. So you can just put in the bracket EOMP so that you can use it in the exam paper short form. The EOMP, emphasis of meta paragraph, is wrongly placed if it's needed. It should be placed after the basis of opinion paragraph in the audit report. Rather, it should be placed paragraph, and you get your second point. Full stop. You're still under emphasis of a meta paragraph. Let's see what's wrong here. Curly Company is facing a legal claim of $50,000 from an ex-employee. In our opinion, the amount should be recognized as a provision, but it is not included in the statement of financial position. We draw attention to the breach of the relevant IFRS. Do we draw attention to a breach in emphasis? Or do we draw attention to a adequate disclosure made in the notes to the account? What is the purpose of emphasis? Do we emphasize on a breach, or do we emphasize on a disclosure? So is this emphasis wrong? We are trying to draw an attention to a breach rather than emphasis draw attention to a disclosure rightly made in the notes to the financial statement. And we are facing a legal claim of $50,000. How material is that? Find me the materiality of $50,000. $50,000. Divide that by the total assets. Divide that by the profit before income tax. Tell me the percentages quickly. $50,000. Is it material? Because if anything is not material, it should not be part of the emphasis either. $50,000. Okay, 1.6% of the profit before income tax. Okay, and how much of the profit? Okay, just let's go with the profit before income tax to save our time. 1.6%. Thank you, Vijay, for that. 1.6% of the profit before income tax, right? So the problem, number 2, the emphasis of a meta para should only be given if there is a material disclosure if there is a material disclosure adequately given in the notes to the financial statements, and the auditor wants to draw attention to it. 1 mark. However, emphasis of a meta paragraph should not be given for any wrong accounting treatment, adopted by the management, or for a breach of a relevant financial reporting standard. Right? So we never give an emphasis, right, for a wrong accounting treatment adopted by the management or for a breach. Number 1, more. Moreover, $50,000 is not even material. It's 1.6% of the profit before income taxes. So being an immaterial amount, it should not be part of emphasis of a meta paragraph, nor it should affect our opinion, It's an immaterial item, right? Why are we emphasizing on something immaterial in our audit report? It's not even affecting our opinion, because even if it is immaterial individually, we are giving an unqualified opinion. And even if it is immaterial, how would we emphasize something immaterial? So, are you getting the definition of emphasis? Emphasis means something material, so it's not even material. And emphasis means something disclosed adequately in the notes. So it's not even a disclosure, it's a breach of a standard, right? So see how many points have we gathered from emphasis? 1, 2, 3, 4. Already the title of the report, 5. 5 out of 10 marks gone. You go down and you start with basis of opinion and opinion. So you copy this heading, basis of opinion and opinion. Ashkit, you were asking me this question at the start of the session. See, you can just copy paste the direct heading, basis for opinion and opinion. That's even fine. And then you can criticize under what should be the right terminology. So you write under this, firstly, the opinion para should come before the basis of opinion paragraph, and the opinion para should come before the basis of opinion paragraph, and the opinion para should be the first para of the audit report. That's the first point, right? Number 2, opinion and basis of opinion should be split into 2 different paragraphs and should not be merged as one, and should not be merged as one, which is currently the case done by audit senior. So you cannot just merge them in one, right? Which is currently the case done by the audit senior. So another critical appraisal under basis and basis of opinion. Now let's go down quickly. I need to save my time. So we focus on the main issues. I will not be focusing on the petty issues. You can just cover up that yourself. You're very good into this topic. We conducted our audit in accordance with ISA. You have to use the full form, International Standards on Auditing. So that's one of another mistake. So instead of ISA, you should have said International Standards on Auditing. Our responsibility under those standards are further described in the auditor responsibility for the audit of the financial statement. We are independent of the company in accordance with the ethical requirements which are relevant to the audit. Ethical requirements, you should have mentioned IESBA Code of Conduct. That is very important. So when you say ethical requirements, you say as per IESBA Code of Conduct. So full form of ISA. And when you say ethical requirements, it should have been ethical requirements under the IESBA Code of Conduct, which are relevant to the audit of the financial statement in the jurisdiction in which the company operates. And we have fulfilled our ethical responsibility in accordance with these requirements. We have conducted our audit based on a materiality level of 1% of the total asset and 5% of the profit before income tax. Do we ever mention our materiality in the audit report? Never. We never mention our materiality in the audit report. So that's another issue. You can criticize and gain marks. So 3 yellows, right? Evidence available to us in respect of the intangible asset was limited. In respect of intangible asset? No. In respect of the development cost. Evidence available to us in respect of the development cost relating to the new drug was limited because of restriction imposed on our work by management, especially the finance director, Phil Stooks. Do we name the finance director in the report? Never. We always use the word management. We never say Phil Stoos. This is very unethical, right? So ISA, give the full form. Ethical requirements as per the IESB Code of Conduct, 2 marks. We have conducted our audit in accordance with the materiality level. We never give materiality level, 3 marks. Intangible asset, no. Development cost relating to new drug, 4 marks. Fifth marks. Phil Stokes, we never name a director in the audit report, 5 marks. As a result of this, we have been unable to verify the appropriateness of the amount recognized as an asset. As an asset? Which asset? As an asset. Which asset are we talking about? So we have to name the asset, right? Sorry, just 1 second. Okay, so we have to use this word asset. I think there's some issue with my cursor. Okay, asset. So asset is wrong. We should have said intangible asset. And we are worried that the asset may be overvalued. We are worried. Is that the right term? We are worried. Auditor has to be confident, right? Auditor needs to be sure. Auditor cannot be worried. So that's an absolute wrong statement. We are worried, right? So it's a wrong statement. It should have been we confirm that the assets are overvalued, or the assets are overvalued, right? There have to be a confirmatory statement here. So we are worried is logically a wrong statement here, right? We are worried is a wrong statement. That the asset may be, you're not sure that asset may be overvalued. You need to be very positive in your tone, right? That the assets, the intangible assets are overstated, not maybe, are overstated. So asset maybe. So we have a lot of wrong languages coming in this report. So maybe is another example of that. Please, maybe is another issue. There's some sort of my cursor issue going on. Probably I can't just fix it up currently, but it's maybe is another issue here, right? Okay, because of the significance of the item, have you explained the significance? Have you defined the significance? You should have mentioned that it is so significant that your profit will turn to losses, because 4.4 million is more than the amount of profit before income taxes, and the profit will turn to losses if the development cost needs to be expensed out. So that is the significance. You never spoke of the significance. You just generally used the word significance, and you didn't bother about explaining the significance here, right? So maybe was an issue, and then significance was an issue. And the lack of integrity by the management. Do we ever use words like lack of integrity by management in the audit report? Never. We have been unable to form a view on the financial statement as a whole. We have been unable to form a view, or we have been unable to form an opinion. We have audited the financial statement of Curly as at the 31st March and its accounting policies. Because of the lack of evidence, we were unable to obtain sufficient appropriate audit evidence with regards to the development cost, because the management has imposed a scope limitation on us for the scientific results and the test trials. And for this reason, we are not expressing any opinion on the financial statement. That's how you give a disclaimer, right? We were unable to obtain sufficient appropriate audit evidence for the matter described in the basis of opinion paragraph, and we are not giving an opinion on the financial statements. Disclaimer of opinion. So because of the lack of evidence is a wrong terminology, we were unable to obtain sufficient appropriate audit evidence that we could gain over intangible assets. Again, it's development cost, not intangible asset, because we were having issues with development cost. We are unable to form an opinion. No, we are not giving an opinion. That's how you put a disclaimer, right? Disclaimer of opinion means we are not giving an opinion on the financial statement. We are unable to form an opinion as to whether the financial statements are properly prepared in accordance with relevant financial reporting framework. So a lot of issues we had in this report. Just let's do a quick recap. Number one, ISA, the full form, ethical requirements as per the IESBA Code of Conduct. We have conducted our audits based upon a materiality. Materiality is never mentioned. Three, intangible asset should have been development cost. Never name the director. Assets, no, assets is a very journal term, intangible assets. We are worried, may be overvalued. We never use these terms maybe or we are worried. We need to be confident that the intangible assets are overstated. Because of the significance, we never define the significance. And then lack of integrity by the management, that's absolutely wrong. And then you say in the last paragraph, because of the lack of evidence that we could have gained over the intangible asset, we are unable to form an opinion. That's not how you write a disclaimer. You basically say, based, we were unable to gather sufficient appropriate audit evidence on the development cost because of the management imposed scope limitation. Therefore, we are not expressing any opinion on the financial statement of Curly Company as at the 31st of March 20X5. That's how you write it, very bluntly and very clearly. So first of all, it says we are unable to form an opinion. So probably the senior is trying to give a disclaimer, which is right, but the way he's giving a disclaimer is wrong. Do you all agree with me? In the last paragraph, the senior is giving a disclaimer. So his mindset is good, but the way he is framing the disclaimer is wrong. Now, what would you have done in the exam? You would have said the development cost is dollar. The development cost capitalized as intangible asset is $4.4 million, which is how much percent of the profit? Can anyone tell me quickly? The profit is 3.1 million. So how much percent of the profit? Quick answers. Which is anyone can give me the percentage? How much percent of the profit? Okay. Vijay, again, thank you. 141% of the profit, right? Which is 141% of the profit. That means if the development cost is not to be capitalized, then the profit before income taxes will become loss before income tax. Therefore, this matter is material and pervasive, as the auditor is unable to gather sufficient appropriate audit evidence on a material and pervasive matter. The auditor should not give an opinion. It will result in a disclaimer of opinion. The senior is right in this perspective. However, the wording of the disclaimer is not rightly put by senior. So there is an issue with how you put the wording of the disclaimer. Otherwise, he was right in the perspective of giving disclaimer. Now, Ashkit, now you can say the heading of opinion para should be disclaimer of opinion, and the heading of the basis of opinion should be basis for disclaimer of opinion. Now, every paragraph you're writing is giving you 1 mark. There's so many wrong use of language. We have named the finance director in the report. We have only used the word ISA. So there was so many criticism you could have done. So just in the shortage of time, I'm trying to give you something workable here, right? So you can see marks going up 1, 2, 3, 4. We already got the fifth mark from the title of the report. 1, 2, 3, 4, 5. You almost got 6, 7, 8, 9, 10, almost 10 marks. So much more to criticize. So you could skip some of these points here and you can mention the other points, right? So is everyone clear? So when you are saying in the audit report, uh, because of the significance of the item, have you explained significance? This is how you explain significance, right? Look at this. This is how you explain the significance. This is the significance, right? 141% of the profit before income tax. That is what you should have informed to the shareholders. Is everyone sound and clear? Will you be able to do the rest of the critical appraisal yourself? Have you got the track clue? So disclaimer of opinion is right. That is what even the senior has picked in. But the way he worded the disclaimer is wrong, and he failed to define the significance into the paragraph. So is everyone sound and clear with critical appraisal? Should we move on to the next requirement? Okay, great. Okay, then you move on to the next requirement, which is about management imposed scope limitation. Now, you've already seen there is a management imposed scope limitation. They're not giving you access to the scientific results in trials. Identify and explain any other matter to be considered and the actions to be taken by the auditor in respect of the management imposed scope limitation. Now, management has put a scope limitation on you. What actions will you take? What other matters will you consider for 5 marks? Now, management is not deviating from their stance. You need to tell management something, right? You need to talk to management. You need to tell management that if you don't remove this scope limitation, we will give a disclaimer of opinion. You need to threaten the management. You need to like blackmail the management, telling them that we'll give you a disclaimer if you don't remove this. So identify and explain the other matters and the actions to be taken by the auditor in respect of the management imposed scope limitation. Now, just to save my time, I've already written the answer, which I can show you. This is my answer here. Again, I've written more than the number of marks. You have to only write 5 points. Can you see the answer on your screen now, all of you? Okay, great. Okay, see the answer. Management imposed scope limitation, matters and actions. Number one, the audit firm should communicate. The audit firm should communicate with those charged with governance. It is a specific requirement of ISA 260 communication with those charged with governance that a significant difficulty encountered during the audit should be reported to those charged with governance, of which a management scope limitation is an example. So if you face any major difficulty in the audit, like a management imposed scope limitation, you have to immediately report this to those charged with governance. So what matters, what actions will you take? You will first of all try to bring this to the attention of those charged with governance. You might not name the ISA if you wish not to, because there are no marks for naming it. So you can just leave it as it is. I just named the ISA for the sake of your knowledge. So it's totally up to you if you want to skip that. In the bullet number 2, the expected disclaimer of opinion due to the severity of the issue should be communicated to those charged with governance prior to the issuance of disclaimer, as those charged with governance must be informed of the implication of the restriction imposed. Make them clear that if you stick to the limitation, we will issue a disclaimer. So try to bring this to the attention of those charged with governance that the management imposed scope limitation would result into a disclaimer. Do you want us to issue a disclaimer? If they say yes, sure, because we are not moving away from our scope limitation, then you have to issue a disclaimer. But you have to bring this to their attention. Number 3, a further consideration is that in accordance with ISA 210, agreeing the terms of engagement, one of the precondition of the audit is that the management will make all information available to the auditor. So management is not making all information available to the auditor. So this is even a breach of the preconditions of the audit, and you should bring this to the attention of the those charged with governance, that there is an audit engagement letter. We signed an audit engagement letter at the start of the audit. You agree to the preconditions. You agree that you will provide us all the information. But why are you not fulfilling your responsibility? So one is the precondition. One is bring to the management knowledge that they will issue a disclaimer, and also communicate to the management that this is a serious issue which needs to be addressed in. Point number four, the firm, we're reading this point, right? The firm should consider if alternative audit procedures may be available to gain evidence regarding the recognition of development cost. However, for drugs being developed, the result of the scientific test and the trials are crucial. There cannot be any substitute of that. And without this evidence, it is difficult to see how the recognition of the asset can be confirmed, right? So even though we can have some alternative procedures, but because the drug is being developed, the scientific test and the trials are so crucial that there cannot be any substitute of anything here. The audit firm should also consider the integrity of the management, because they're not giving evidence to the auditor, so that will question the integrity of the management. The audit firm may wish to revisit the management representations. If you have obtained any representation from the management of Curly Company during the audit, you need to revisit those representations, because management is imposing a scope limitation which is putting a question mark on their integrity. So if a question mark comes on integrity, so any representation provided by the management will also become questionable. Lastly, the audit firm should reassess the future of the auditor-client relationship. Should they step down as an auditor? Probably, or rather definitely, yes, they should step down as an auditor. So this is like more than 5 points. Choose the 5 points you want to write. But remember, whenever the management impose a scope limitation, first of all, discuss this with management. Tell them the implication for the opinion. Tell them the preconditions of the audit. Uh, Challenge their integrity. Any representation given to them will become questionable, and assess the future of the client relationship. And also seek any alternative procedures you can apply if management has imposed a scope limitation. In this case, alternative procedures were impossible. So we had 3 bullets, 4 bullets, 5 bullets, 6 bullets, 7 bullets. So this was a 7 marks answer. You have to write only a 5 marks answer. So I've given over here a 7 marks answer. You will choose 5 points to write. Is that clear to all of you? Are you all clear with the management imposed scope limitation? Have you got knowledge on that? Okay, thank you so much. Okay, thank you, Vijay, once again. Okay, just let's move on to the last requirement. The last requirement of this question number 2 was with regards to the exhibit number 2. Discuss the matters that should be considered in determining the assistance that should be provided by, and the extent of reliance that should be placed on the work of internal auditor. Matters in determining the assistance. In determining the assistance, number 1, and the amount of reliance you will be placing on the internal auditor for 5 marks. Okay, let's go down to Larry Company. Let's read what's the issue. You are currently conducting a post-issuance quality review of the audit file of Larry. So have we issued the audit report? Yes. Which has a financial year end of 31st of January, and in respect of which the unmodified audit opinion was issued last month. So have we issued the audit report? Yes, we have. So we are conducting a post-issuance quality review. That is after the publication of after the issuance of the financial audit report. To improve audit efficiency, the work of Larry Company internal audit function was used extensively by the audit team. So during the audit, which they've already performed, the work of Larry Company was extensively used by the audit team. Control C, and we bring it down here. But we have to see whether this work extensively used, have you fulfilled the criteria of using the work of internal auditor? So the work of Larry Company internal audit function was extensively used during the audit. That's the point number one. We'll elaborate on it. Okay, number two. Larry Company has a well-established internal audit department which is tasked with a range of activities including providing assurance to management over internal controls and assisting the company's risk management department. So they have a very good established department which have a very good scope as well. So we have an established department with a good scope. So that can go in the favor of the internal audit department. That's point number two. Number three, the internal audit department is managed by a qualified accountant with many years of experience. So the internal audit department is managed by by a qualified accountant with many years of experience. So at least they have a qualified person. We'll see how we can develop this point. Let's copy this point from here. The internal audit department is managed by a qualified accountant. Just let's bring the point over here. Okay, next. An extract from the executive summary of the latest internal audit report to Larry Company's finance director. Now, to whom are they reporting? Whom is internal auditor reporting? Executive summary of the latest internal audit report to Larry Company's finance director was included in the audit file. So to whom is the internal auditor reporting? He's reporting to the finance director. So is he independent? No, he's not independent. He's reporting to the finance director. He's not reporting to anyone like non-executive directors or anyone like an audit committee. They're reporting it to the finance director. So what is the summary telling us? Now, this is the summary we have put in our working papers, right? The summary says, we are pleased to report that Larry Company's internal control are working well and there has been no significant changes to the system during the year. Now, the internal auditor is saying that the controls have been very good throughout the year and there have been no changes in the systems and controls during the year. As a result of our testing of controls, we uncovered only two financial irregularities which related to failure to obtain appropriate authorization. Number two, inadequate access over company's IT control. You have two problems. And see, what is the internal auditor telling? The internal auditor is saying, we are pleased to report that Larry Company internal control are working well. Look at this statement. Despite the fact we have two problems in internal control given under. So look at this statement. Look at this statement. Despite the fact there are two problems. One problem is the failure to obtain authorization and approval right over here. And one problem is inadequate access to controls over IT systems, two of them. And look at the amount, $750,000 and $575,000. We have not been given anything to judge the materiality, but they're quite good amounts. So now look at the answer. Discuss the matters that should be considered in determining the assistance that could have been provided by and the extent of reliance which should have been put on the internal audit function. So you have to discuss the matters. Now, where are the matters coming from? They're coming from the case study. Number one, the work of internal audit function was extensively used by the audit team. Full stop. If the audit team wants to extensively use the work of the, I'm using the short form internal audit function, so I put in the bracket IAF. That's an easy way you can do it in an exam. Then rather than saying internal audit function again and again, you can say IAF. If the audit team wants to extensively use the work of IAF, they should have first they should have firstly established whether the internal audit function at Larry Company is independent, competent, experienced, and the work performed by the internal audit function is well documented. It seems that there are issues with the prerequisites. There are issues with the prerequisites of using the work of internal audit function at Larry Company, which are explained below. So first of all, if you want to extensively use the work at Larry Company, you should have emphasized on the prerequisites of using the work, which includes competence, experience, work documentation, and independence. But there are some breaches which we are discussing below. Next point. Larry Company has a well-established internal audit department which is tasked with a range of activities including providing assurance to management over internal control and assisting management teams. This means that the internal audit function at Larry Company has a good scope of work, and being well established means that the department is well resourced to fulfill the requirements and the scope of work effectively. So at least this is favorable, right? Number two, the internal audit department is managed by a qualified accountant with many years of experience. It is not sure that whether the other staff members in the internal audit function are qualified too. Is it only the head of the department? Is it only the head of the department who is qualified? Because if the other staff members within the internal audit function are not qualified, it will compromise the quality of work performed by the internal audit function. So it says that the head of the function is a qualified accountant. What about the resources working under him? What about the team working under him? Are they qualified too? Because if they are not qualified, they will compromise the quality of the work. So they have a good scope of the department. The scope is good, but we have some concerns about the qualification of the other staff members. And also, you should have checked the qualification of the personnels before you relying on them. You can write this point here. Moreover, the audit firm should have reviewed the qualifications of the staff members before placing any reliance on the internal audit function. But perhaps they have not done it. Okay, executive summary of the latest internal audit report to the finance director. Now that's quite questionable. Was included in the audit file. The internal audit report. The internal audit report is addressed to the finance director. This means that the internal audit function is not independent as they are reporting to the finance director, and most of the frauds or errors in the internal control relates to the financial systems, and the finance director being the one addressed in the report, the errors, if any reported, will go unchecked or uncorrected. So you're reporting to the finance director, and most of the time the finance director is the one responsible to take actions. And finance director will be reluctant to take actions on any issues underlying the financial systems, because he would not like to criticize himself. So if you're reporting to the finance director, you're not independent. So I think the independence is a lacking element in the internal audit function at Larry Company. So the audit firm should have checked this prior to placing extensive reliance on internal audit function. Now that means they've already placed a reliance, they've already issued a report. Now that is the biggest mistake they've done. Knowing the fact that the internal audit function is not independent, you could not have put an extensive reliance on them. This is the biggest mistake you've done in the conduct of the audit. We are pleased to report that the internal audit functions are working well. Final point, we are pleased to report the external audit functions are working well. This statement of the internal audit function contradicts the fact that there are two control deficiencies identified. There are two control deficiencies identified worth $750,000. You can just please name them. I'm not naming them. $750,000 and and the other one is how much? The $575,000 and $575,000. That means the statement given in the report is inappropriate and is inappropriate and fail to demonstrate the right situation on ground. Thus, on the basis of the inappropriate reporting by the internal audit function and lack of independence of the lack of independence, the audit firm should not have placed extensive reliance on the work of the internal auditor. Now see, I've just gone over the exhibit number 2. I found the points. We know the journal definition. You have covered this so many times in the classes: independence, competence, experience, and the work documented. True or false? Tell me. How many times have we covered this definition in the class? You normally make a mnemonic for that. ICED, ICED. How many times have we covered this ICED in the classrooms, right? Now the question was telling you information about ICED. There was question mark on their independence because they were reporting to the finance director. Competence, the head was competent, but we were not sure about the competence of the department. Experience, they had a well-established department, so probably the experience was there. I didn't criticize on that. Documentation. The documentation was very inappropriate because the internal auditor was telling everything is good, despite the fact there were two major deficiencies in the internal control. So we had issues on independence, we had issues on documentation, and I think for that reason, the extensive reliance you have put on the internal audit function was inappropriate, and that must have compromised the quality of the audit work you have done. because we are conducting a post-issuance quality control review. The report is already issued, right? We can't do anything. Is everyone clear with the answer structure? If you want to give headings, you can give headings as well, because I've just completed my answers. I can give my headings over here. The work was used extensively by the team, so you can put a heading over here. Extensive use of work. Extensive use of work. We can give the next heading. We need 5, right? To 5 marks. Uh, Well-established internal audit department. Well-established internal audit function. And you can use the short form IAF. So that's heading number 2. Then you go to the heading number 3. That is managed by the qualified accountant. They have a qualified accountant. That is the point number 3. But we had concerns about the rest of the team. Then we had the 4th point, the internal audit report. Internal audit report. That is the 4th point. And finally, we had a point around we are pleased that the controls are working well. Internal audit report, internal audit report to finance director, And then we had another point on the internal audit report. Uh, the internal audit report, some things like issues. Uh, the conclusion was inappropriate. The conclusion given in the internal audit report was inappropriate because they were saying the controls are good when they're not. And then the last, we give a conclusion. Thus, on the basis of the inappropriate reporting by the IF, we should not have used the work. So this is basically your conclusion. Now look at the format of the answer now. Headings, and we given a 5 marks answer. I've already given you the answer for the management imposed scope limitation on the Word file. I'll share that. And I've already given you the answer for critical appraisal and shared knowledge. That disclaimer of opinion was a very valid opinion in this answer because the profit would turn to losses. Is everyone sound and clear with this question number 2? Any questions you have around question number 2 and the drafting of it? Any concerns? Anything you would like to ask about question number 2, part A, part B, and part C? Or are you sound and clear with overall drafting and understanding? Please give me the quick reply so we can wind up the session. Is everyone sound and clear with part A, B, C, how we went over it? 12 minutes of the reading and planning time and 36 minutes of the writing time. Vijay, yes, you can trim it down because I copy pasted a lot, right, Vijay, for the sake of the session. So you can just trim down instead of a lot of copy paste. If you see the content I wrote after copy paste was very less. So if you can just remove the copy paste content, automatically it will shrink down, right? But 1 mark means at least you're writing 2 sentences, 2 to 3 sentences for 1 mark, right? So in that case, it would be appropriate. But leave aside the content I've copy pasted. Is that clear, Vijay? So 1 mark is not a 1 sentence, right? Normally a procedure is 1 mark, 1 sentence, right? Action is 1 mark, 1 sentence. But other than that, 1 mark means you're writing 2 or 3 sentences. Okay, thank you, Hamza. So all of you are fine set with the drafting today. Well, so I will be doing the final session tomorrow. The question number 3 comes in focus and we're going over that. There is a sustainability question in question number 3, and we know sustainability is an important topic. So we'll just focus on that so we can have at least a good drafting of sustainability tomorrow in the session. So wish you all the very best of luck. The session will get uploaded on my YouTube channel and I'll be sharing what I have documented with all of you shortly. Thank you so much, all of you. Take care, study effectively, and I wish you all the very best of luck for your exams. Yes, you're all welcome. You're all welcome.